Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Wednesday. There's quite a lot that has already happened in the markets today, and we'll be expecting more to be coming up for the day. So once we join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So first things first, we'll be taking a quick look at what transpired over the early morning. So as you can see, it was a very busy Asian session. We started with New Zealand retail sales quarter-over-quarter, which came in weaker than expected at negative 1.4%, compared to an expectation of 0.2%, and also indicating that the previous month, there was also a contraction in retail sales at negative 1.0%. So core retail sales also dropped negative 1.1%, very close to the expectation, but also the previous month, there was a contraction of negative 1.6%. So this is clearly indicative that the New Zealand consumer is currently real weak. So MI lending index came in as expected, no volatility there, but the majority of the volatility this morning has come from the New Zealand dollar. So the Reserve Bank of New Zealand decided to hike interest rates by 25 basis points, eventually moving interest rates from 5.25% up to 5.50%. And I think this is the highest interest rate level since the year 2008. So naturally, we would expect that a continued hike in interest rates would strengthen the New Zealand dollar against other currencies, but in reality, we saw the exact opposite. So the main reason this happened was because of the corresponding statement. Apologies for that. So there was a monetary policy statement, a rate statement, and also a press conference happening immediately after the announcement of the interest rates. So the Reserve Bank of New Zealand basically decided to hike interest rates by 25 basis points. But then during the press conference, they also noted that these may be the peak interest rates for this cycle, meaning that the central bank is not looking to hike interest rates anymore. So this brings a relief to all the parties that were involved in these markets, knowing that they were facing continued pressure from a strong New Zealand dollar and a weak New Zealand equity market. But now that we have reached peak interest rates, it's time to start thinking about the opposite direction. So as a result of this, rather than the New Zealand dollar strengthening, it weakened against the dollar, again, as well as against other currencies. So the Reserve Bank of New Zealand has an inflation target of 1 to 3%. However, from the most recent reading of inflation, it was well above 6.7% in the March reading. So with annual inflation at 6.7%, and the target is between 1 and 3%, it means that there is more room for inflation to drop until it gets to the target. But the central bank has already identified that this is the highest that they are willing to go with interest rate hikes. And these resulted with a big reversal in the New Zealand dollar pairs. So if you look at New Zealand USD, so immediately after the announcement, you can see the sharp spike downwards. And this was during the Asian session. And now that we're getting into the London session, there seems to be continued momentum, further downwards, indicating the strength of the dollar against the New Zealand dollar currency. So as you can see, our expectation here for the week was that the market would eventually drop all the way to the lower trend line. And then once we got here, then we'd be expecting the same pattern to continue. However, from the comments by the Reserve Bank of New Zealand press conference, it's clear that we are no longer expecting any rate hikes. So in this case, we start seeing the opposite being true. So now the New Zealand USD currency pair is sharply dropping. And it seems like the immediate target seems like the low that we saw in April. So there is a good chance we'll be seeing this pair dropping further down to 0.61124. So this seems like a nice target for anyone who participated or is still holding the position. So 0.61124 seems like the key price level to watch. So besides this, there was more news. So from the economic calendar, you can see that right after that, we also had news at 9 a.m. and this was affecting the UK pound. So on one hand, we had annual CPI or annual consumer price index, which is a measure of the changes in price in the UK. That is retail price month over month compared to the same month last year. So as you can see in the previous reading, it was 10.1%. Markets analysts expected that this inflation would drop to 8.2%. However, the drop was well within limits at 8.7%, but we didn't quite get to our target of 8.2%. So this is still significantly high inflation. We know that the Bank of England is basically targeting to get inflation back to a 2% target. So while inflation is holding at 8.7%, this is still a big number and it's very worrying. So as for core CPI, which is basically the consumer price index without food and energy prices, it rose from 6.2% to 6.8% in April. And this is the highest rise since the month of March 1992. So this was a big surprise in the market. So nobody was expecting that inflation would rise this far, especially for core inflation. And with this happening, we also saw retail price index being up 11.4%. Producer price index slowed down to negative 0.3%. This is our input, while the output remained steady at 0.0%. And then we had a crazy reaction happening in GBP pairs. So if you look at pound USD, initially it had a very nice spike. So after the announcement, if you use the 15 minutes chart, you can see there was a big spike upwards, but then later on, we saw the reversal happening here, being testament to the strength of the dollar. So after seeing that inflation data, then the market is pricing in a possibility that the Bank of England will go for a 25 basis point rate hike on its next meeting. So with this expectation, we expect the pound to remain strong. So this trend line was already broken here. So even though the market pulled back on the next hour, there's still a good chance that we'll be seeing a continued strength of the GBP against other currencies. So there is a good expectation that the pound will remain strong as the markets try to price in the possibility of another rate hike by the Bank of England, and potentially towards the third and fourth quarter, we could be seeing interest rates in the UK rise to 5.25% or even 5.5%. So there's still more work that the Bank of England has to do in order to get the inflation back to target of 2%. So I will be expecting more rate hikes to be happening this year. So besides these, there's more news coming up for the day. So at 11, we saw the German IO4 business climate survey, basically printing 91.7, which is a slowdown from the previous reading of 93.0. And of course, the 93.4 was the reading last month. So going forward, we'll be looking at the housing price index for the UK at 11:30 a.m., which is expected to increase by 5.2%. So when you see housing prices increasing, then it's not a good thing. Basically because the Bank of England is looking at lower housing prices. So if they're rising higher, then it's a problem, and the Bank of England may have to be very aggressive with rate hikes in order to get these moving in the right direction. So today, we're expecting two speeches from the Bank of England governor. So the first speech will be happening at exactly 12:30 p.m. And these will be at our Net Zero Delivery Summit in London. So we may not have any huge commentary happening on the first meeting, but we may be expecting some fireworks on the second meeting, which will be happening at exactly 4 p.m. later in the day. So the Bank of England Governor Bailey is set to issue a speech in a fireside chat titled Inflation and the Economy at the Wall Street Journal's CEO Council meeting. So for this one, there's a good chance that we will be having some commentary on the Bank of England policies and perhaps some hints on monetary policy. And this is expected to raise volatility in GBP pairs as well as UK equities. So later on at 5:05 p.m., we'll be having a speech from US Treasury Secretary. This is Janet Yellen. Remember, she was a Fed chairperson some time back before Jerome Powell. And this is majorly concerning the US debt limit. So she will be participating in a fireside chat titled The US Economy on the Wall Street Journal's CEO Council Summit. So we know that it's a major theme this week as well as this month as the US gets closer to the X date where it could potentially default on its obligations. So this will be a very important meeting, and there's a good chance we'll be seeing market volatility arising from this. So then towards the end of the day, we'll be expecting the FOMC meeting minutes. So remember, every time the Fed meets or the FOMC, short for Federal Open Market Committee, they normally have minutes for their meeting, and those minutes are always released 3 weeks after the event. So 3 weeks after the last Fed meeting, where they decided to hike interest rates by 25 basis points, now we'll be seeing the final details of what transpired during that meeting. And these will be very important for investors as well as traders. So we will be following closely to read the minutes and understand how they arrived at that decision and what they project for the US in the next quarter. So there is a good chance this will increase volatility in USD pairs, as well as gold, US oil, or what you call the WTI, as well as US equity indices, the S&P 500, the NASDAQ, the Dow Jones, and so on. So this is expected also to raise volatility in the markets. So perhaps we can conclude by saying that today is the most volatile day for the week, having seen volatility come from New Zealand, shift to the UK, and now more volatility is expected in the UK as well as in the US later in the day. So we'll also be looking at crude oil inventories in the US at 5:30 p.m. and this could also raise volatility in oil prices. So having known all that, you can see the consumer price index for the UK. So be sharing the final details with you so that in case you want to go through the data and see what are the leading indicators for inflation, then you'll use that to your advantage. So that was the data release. I've just shared the link. And also for the Reserve Bank of New Zealand release, I'm also going to share that link in the comment section so that you can grab that content later and try to understand what happens. So let's see if there's any questions. Hello, Maurice, Patrick, Mana, Rita, Charles, Esther. Thank you guys for joining in. Hello, Chieng, Martin, and Moses. I always appreciate having you guys on the session. Also, we have Owen, Vandy, Eunice. Thank you, guys. So on the next part of the presentation, we will be talking about the most important thing that is currently being the concern in the market. So we know that the US Treasury Secretary, Janet Yellen, has mentioned that if the US does not remove the self-imposed limit on the debt ceiling, which basically limits US borrowing at that $1.4 trillion, then the US government could basically default on its obligations. So we know how governments work. They have income coming from tax collection and also expenditures. So the government collects money from the economy and then uses that money to spend. However, the US seems to be this fat, irresponsible kid who always spends more than they collect. So the US always runs a surplus budget. Sorry, not surplus, but a deficit budget. So the US expenditure is always higher than the tax collection, which keeps increasing the debt. But now they're facing a law that limits them from borrowing more, which basically means that they either have to manage the amount of money they have or face an eventual default. So as soon as the 1st of June, which is 7 days away, if the US doesn't pass a law to basically expand the debt limit, sorry for that, then it basically means that the US will not be able to honor its bills. So there has been negotiations happening between the US president, which is basically a representative of the Democrats, and the House Speaker, Kevin McCarthy, who represents the Republicans. So the Republicans are adamant, they don't want this to happen. So apologies, just a moment, I'm having a blocked nostril. All right, I'm back. So if the US is unable to pay its bills, there's quite a number of consequences. Some of the consequences that could come from this include the following. One, the US credit rating would become a huge problem. So if the US is missing bills or delaying payments, then you could see the Moody's are downgrading the US credit rating. And this would be disastrous, as investors would be losing faith in the US government's ability to repay its debts. So that's quite a concern right now. So the other thing that we know could happen if the US doesn't honor its debts is that there could be a very big spike in unemployment in the US. So if let's say there are firms that are expecting payments from the government and those payments are not there on time, then those firms will not be able to pay their employees. So out of those people would be unemployed. So there would be a big spike in unemployment. The other thing is that in a bid to balance its budget, so remember I mentioned the government will collect taxes and then use that those taxes to pay the obligations. So if the obligations are higher than the tax collection, then the government tends to cut its obligations. And one of the ways the governments do this is by cutting things like social services, non-essential parts of the government. So we could be seeing things like museums and public parks being closed down, and the employees in those institutions being sent on compulsory unpaid leave. So that's quite challenging. So for the president and the Democrats, they don't want the government to default on its obligations. So the President Biden has insisted that this is not going to happen. So on the other hand, the Democrats are basically pushing for, sorry, the Republicans are pushing for responsible spending from the government. So they are saying, yes, you are collecting good taxes, but the way you are spending it is something that we don't like. So the Republicans are pushing for spending cuts. They want the US government to be a little bit more responsible, to spend money in a nicer way, to be more vigilant with its spending. So for them, the only way that they are going to agree to a deal is if the the administration agrees to spending cuts. So some of these spending cuts include the aid that is being sent to Ukraine to support its war against Russia. So it's still a very contentious issue, and they're having daily meetings. So the last meeting was happening last night. And as you can see from here, a top lieutenant, I don't know if it's lieutenant or lieutenant, stated that there are no further meetings scheduled after Speaker Kevin McCarthy left the US Capitol late on Tuesday afternoon with a statement that the two parties had not yet reached an agreement to prevent the first ever US default. So this is now becoming a key concern for many investors in the markets, and investors are already reacting to this. So one of the reactions that we saw yesterday after noticing that the progression of talks is not working is people beginning to price in a possibility of the US government defaulting on its debts. So one of the reactions we have seen is gold making a big bounce from a support level just above 1952 and making a rally all the way up to 1978. So in the last 1 hour or 2 hours, we saw gold prices pulling back down, but now they still seem quite resilient, and there is a good chance we will be seeing gold trading higher as investors hedge against the risk of a US government default on its debts. So having broken this upper trend line that has been holding for quite a period, there is a good chance we'll be seeing some further upside happening in gold. So also note that whenever we have a breakout happening in charts, a pullback or a retest to the breaking point is quite normal. So if you interpret this way, then we can say that there was a break and also a retest happening here. So market breaks above the trend line, pulls back to the breaking point, and now a continuation even harder. So there is a good chance we could also be seeing gold trading back to 2000, but this is only a theory. We just have to wait and see what price presents to us. So as for the dollar index, it has been very aggressive since this bottom at 100.8, breaking this particular trend line and moving higher. Last week, a very good rally before the pullback on Friday. And then this week, you can see we have had 2 consecutive days moving higher, and the dollar index seems to be struggling to break the 103.459 level. So you can see there's quite a number of retests of this area where the market is attempting to break but failing. So this was the first time last week, then yesterday, and then today. So it seems like a solid resistance. So if we see the dollar index heading back downwards, then other currencies could be regaining momentum against the dollar. So that seems to be a theory for today. So if it happens to play out and we see a strong rejection of this level and the dollar index goes back downwards, then out of these major currencies could start recovering. So I already mentioned for the pound USD, I expect some further upside. So New Zealand USD, for this one, we could be seeing some further downside as we saw the interest rate data. But for Euro USD, we are seeing a double bottom attempting to form here. So some further upside is still in the books. For USD CAD, we saw a break on this triangle. The market pulled back very nicely yesterday, and today it has rallied further. So our initial target remains in sight, 1.35628, which was the top of the smaller pattern here. And also there could be some room for some further upside. However, key and important price level is 1.35628. So for USDN, we can see the market is basically trading within a triangle. Nothing much is happening. It basically looks like some form of consolidation. So I can't say precisely that this is forming anything meaningful. So it's something where you have to wait and see whether there's a break, and then you can trade the impulse. So for gold, I expect some good rally. And for equities, which seems to be the most important signals, we are seeing the market breaking outside of this diamond, heading higher, getting to resistance, and now it's pulling back downwards. So from the daily chart, this is how it looks like. Market that had rallied all the way to resistance, pulled back for one day, tried to go up, but then for yesterday and today, the price action is indicative of some further downside. So I could be expecting to see some further downside in SP 500 index. So same case for the NASDAQ, double top formed really well, completed the pattern towards the end of the day yesterday, broke the pattern, and now we are breaking below this trend line again. So from the 4-hour chart, this is how it looks like. So these are trend line that was holding very well. So market broke towards the upper side, formed a double top, and now we are going right back inside. So one of the key things we are seeing here, or the key themes, is the market pricing in the possibility of a US default, which would be catastrophic for shares. So there's a good chance we'll be seeing some further downside in the NASDAQ. And also for the Dow Jones, this one was much faster. So it has kept going down currently, testing a support level on this trend line here. So we will be observing this price level for a potential break. So the price level is right here, 32,931. So this is what we just tested on the last 1 hour. So if there's a break below this, then it might make sense to trade the breakout towards the lower side. So of course, the reverse is also true. So if there's a strong bounce here, then we could be headed back upwards. But from what we are seeing from the fundamentals, there seems to be a good chance we'll be seeing some further downside. So that's it for today. Thank you guys. I know today I overextended the session. It was supposed to be about 10 minutes, but hopefully I was able to deliver value to you guys. So I've shown the consolidation on USDN. So I think that question is answered. So how likely is it that the US can default? It's very likely because the two parties don't seem yet to agree on a deal. So as long as there is no deal, then the US could be defaulting either on the 1st or the 2nd week of June. So hello, I'm here and I want to learn trading. Can I start trading with like $7? Kindly go to the FX Pesa YouTube channel and find the Novice to Pro series. It will be really helpful for you to understand the basics. For your initial balance, I think the $7 is too small. You won't have survival chances, especially if you happen to be unlucky and lose your first 1 or 2 trades. So starting with a bigger balance is much safer. Hi, the Snapshot series is really insightful and helpful. Keep it up. Thank you, Joe. Hey, Rufas, good content. Thank you, Charlie. Please extend time more. So luckily, today is Wednesday. So hopefully I'll be able to share more content on the Telegram group. I know you're part of the group. So once I have more content, I'll be sharing. There was a question on DXY resistance. I think I've already answered that. So thank you very much, guys, and I hope to see you on the next session.